if you need help in the closing cost arena, and if you're just up against a seller that just will not pay your closing costs, the best thing to do is to have the lender increase your interest rate, use that higher interest rate, maybe it's 3%, maybe it's 3.25%, and let them actually pay some closing costs for you. Part 3 is that interest rates are lower on a VA loan. Okay, now that may sound great and all, but what's that really mean? Well, there's more to it than just the VA loan rates being lower. So when rates are lower, that means actually a lender's, what we call a rate stack, is completely different than on a conventional loan, meaning that, so if I say, let's just take a new rate out of the air for a second here. So VA loan rates, let's say they're currently around 2.75 and conventional loan rates are around 3.25. That's typically what you're going to see in a delta now between the conventional and the VA rate. So about a 0.5% difference. Now, the big advantage to this being is that because the base VA interest rate is a lot lower, it lets you do a lot more playing around with the interest rate. Now, what I mean by that is that on a lender's rate stack, a lender can actually go higher in interest rate and help you pay some of the closing costs. Now, this has changed quite a bit over the last year or so since COVID came into play, and like the secondary markets did change a little bit, but it's always been that the lender could increase the interest rate to help pay for closing costs. Now, more so with a VA loan. So this is why that not just are the rates lower, the base interest rates lower, you can also buy down the rate cheaper, meaning that I could go from 2.75 down to 2.25% in today's scenario. And a conventional loan, I can't even do that. So like just the expensiveness of buying the rate down is a lot more on the conventional side than it is on a VA side. Now, and then conversely, what I'm recommending for everybody right now is that if you're looking at buying a house right now, it just depends. The market goes in and out, right? So nowadays, it's very, very difficult to get closing costs paid by a seller. This isn't always true, but this is where we are today. So if that's true, or if you're in a market where you might see rates being improving in the near future, which, I mean, who knows, with all the stimulus recently, we're in 2021 now, with all the $1.9 trillion that was just approved by the Senate. I mean, let me go into my crystal ball and we say that we maybe be having some sort of a recession next year. Who knows? Hey, with that said, if you need help in the closing cost arena, and if you're just up against a seller that just will not pay your closing costs, the best thing to do is to have the lender increase your interest rate, use that higher interest rate, maybe it's 3%, maybe it's 3.25%, and let them actually pay some closing costs for you. So really, this is the main benefit. It's not just the rates are lower, but that the flexibility with the interest rate is a lot better on a VA loan. Hope this helps. That is episode 3. Yep, that's it.